So welcome everybody. This is the 19th GRC Supper Club, albeit the 4th virtual one. And when we did the trilogy, the COVID trilogy last, I think it was this time last year, I think none of us expected to go into a 4th virtual event. And I'm hoping this will be the last one before we actually go into face-to-face meetings again and live dinners. So we'll keep our fingers crossed there. Tonight is really about understanding if a combination of SOX-lite or SOX UK with combined assurance and self-demonstration will really help you reduce that regulatory pain or that continual regulatory change that you're seeing. We're going to start with Suzanne. So please welcome to the stage, Suzanne Calcagno, if I pronounced that right, Suzanne. And
very close, yes.
Was that right?
Very
she
close.
Is the Global Head of Regulatory Response and Oversight at HSBC. And we spoke earlier in the week and last week as a group, and some of the areas that Suzanne's going to touch on is around the regulations, G20 and the maturing of the rules, and also assessing effectiveness of processes, be it audit board and regulatory scrutiny. So I'm going to hand over now and welcome Suzanne.
Thank you, Lee. Can everybody hear me okay? I was telling Lee earlier, my VPN, I think it's classic COVID, my VPN has been a bit finicky today, so I'll just raise your hand if I start to break up a bit. But thanks so much, Lee, for the invite, and to Capco as well. As I said, I'll start this, as all good panel talks do, with the note that my comments are my own and not HSBC's. But I think they sort of represent the direction of travel that we're on. So a little bit of background about me. I joined HSBC in 2019 in June into what was my first role in operations. So I am the head of reg response and oversight for the broader operations team, which I think was really in recognition of the fact that operational risk and regulatory risk are related notes. And whereas previously there was quite a bit of really excellent coverage around operational risk, there was less focus on helping the teams get ahead of regulatory risk and really assess the effectiveness of their processes and how it aligned to the regulators' expectations. So prior to that, I started my career a million years ago as a commodities trader. And then I moved into legal and compliance after I did my qualifications to become a lawyer in the States. So this role, I think, is in an area that's sort of been historically underserved from a compliance and reg perspective, which is really focused on post-trade, so operations, technology, and finance. And my current role, we refer to it as a line 1A role under the kind of 3 lines of defense model, in that it's really my job to work from within the team to challenge the adequacy and effectiveness of our processes and controls, with really the related goals of identifying and managing issues as they come up, figuring out what internal and external escalations are necessary, and then looking to facilitate internal external exams related to those processes. So it's kind of a front to back view, in that I also advise the change teams on their plans to operationalize new and amended regs, and then also work with them to assess sort of the effectiveness of those implementations. So what I'll cover today will address some of the issues on Lee's agenda, but happy to take questions on anything else that folks would like to talk about.
Oh, and Suzanne, sorry to butt in. I forgot to mention that we have got I'll be popping in to keep us on time, but also your point about the Q&A. There is a Q&A panel, which I forgot to mention. Hopefully you've got access to that as attendees. Fire any questions over, and we'll ask a couple to Suzanne at the end before we go into Sonia's conversation. Back to you, Suzanne, sorry.
No worries, thanks, Lee. So in the last few years, I think the one remarkable trend, certainly in the last 2 or 3 years, is what we've witnessed around the increasing sophistication of the regulators that we interact with. And as a consequence, they're really ever increasing expectations of maturity in our ability to comply with those regulations and to respond to issues as they come up. So I'll focus most of this on the reg reporting space, because that's what I've been spending time on in the last 6 to 8 months, but it's applicable really across all the operations rule sets. So the completeness of reporting is assumed. They assume that we've got it right at this point, given that many of these regulations have been in place for upwards of 10 years. The more recent ones in in Europe and the UK in the last 4 to 5 years. So there's a real expectation that the models are mature and that firms have the ability to identify, escalate, and remediate issues as they come up. And I think we're seeing some of that embodied now in the new rules that are coming out, or the refits and rewrites, which really up again that level of expectation in terms of creating really quite tight timelines within which firms are expected to be able to resolve issues. So from our interactions, the regulators have really all made clear that they're also now using reporting submissions beyond just validating that we're complying with the rules that require us to report, but also to facilitate their market surveillance, their prudential supervision, and also to look at market trends, not just relating to the individual transactions, but you've seen some enforcement actions recently, I guess one specifically this week, where regulatory reporting submissions were actually used to identify a pattern that that led to some concerns about money laundering and some sanctions violations. So it's been really interesting to me to see how they've become much more sophisticated at using this information in a way that enables their mission, which, you know, as much as it obviously keeps us on our toes, is gratifying because it's much more than just sort of sending the information into the void. We know it's being used meaningfully at the other end. And in that vein, the focus has really shifted to improving the quality and the utility of the data being reported. So we've been gratified to see some of the refit exercises really look at whether all of the information that's being submitted is really necessary, and whether some of those obligations can actually be pared back or really demised. And we're seeing a lot of increasing focus, not just on the quality of compliance with that obligation, but also with how we determine whether or not we're actually doing it right. So I know the panel will speak to that later, but I'll talk a little bit now about how we look at that. So in terms of frameworks, really in order to demonstrate the effectiveness of processes and oversight, we've been working to establish a framework which defines minimum standards for the individual controls that we run. And in those minimum standards typically speak to the scope of the control, the frequency within which it's run, and then sort of what do we do with the output in terms of escalations and resolution. And we worked very hard to get the front office risk owners and the second line risk stewards on board with that model, because it identifies not just what we do, but also what we don't do, so that when we do come to be examined or audited, it's clear what activities we've been undertaking. And then the way we've sort of thought about it is somebody can tell us we've drawn that line in the wrong place and we should be doing more, but we at least can have that conversation consciously and not based on kind of a sort of side of desk view. So ideally, the framework should create a set of common standards and across those controls that can be measured. So what we've asked the BAU teams to do, the guys who are actually operating these controls, is to maintain affirmative evidence that can be validated by teams like mine and also our colleagues in line 2 and 3, rather than at the time of an exam or at the time of an audit, having to scramble to compile all that. So it's often styled under continuous improvement, but really it's continuous monitoring. And it's actually, at first, I think it felt very onerous to them, but now that they've been doing it for quite a while, it feels that it's embedded, and also they kind of see the value as we've had exams come through where all they had to do was like hit a button and send me everything that they've been maintaining, rather than trying to build evidence at the time of the exam. So even though the promise of harmonization across the G20 regs really hasn't materialized, and I know there's been lots written on that, and there's lots of good articles on LinkedIn that seek to kind of solve that problem, we really have to deal with the regulations as they stand now. So the use of that common assessment framework across all the regimes lets us calibrate against the relative risk posed by each regulation, and provide a consistent assessment of whether our operational control environment really mitigates that risk. So that's kind of our calculation. What's the risk level? Is our operational control environment adequate to mitigate it? And if not, what's the residual risk, and how do we address that? So that's enabled us to create a set of central data quality controls where the regulations have the same definitions and taxonomy for those attributes, and then to use them in other parts of the organization. So again, kind of creating that common set of expectations. And then obviously off the side, we've had to maintain bespoke controls where the regulators haven't harmonized, or where where we're starting to see some increasing divergence as well post-Brexit. So the challenge, of course, with any framework is that it can take quite a long time to develop, socialize, and launch. So at the same time, we've really had to figure out how to stay, I hate the word agile because it's used far too often now, but we've had to figure out how to stay nimble in order to absorb and respond to regulator guidance, QA, things like the market watch issuances, and to trigger events like enforcement actions in a way that lets us continue to assess and perform targeted effectiveness reviews based on the issues raised in whether it's QA or enforcement actions, and then embed those recommendations into the framework as we move through. So in terms of cost, always the key question. I think the age-old question for us has been build versus buy. There are really increasingly excellent, sophisticated tools in the market that provide assurance controls, and also some pre-submission checks. The challenge there is that some of them can be obviously quite difficult to integrate. And as the refits and rewrites are happening in the market, that I think will be the really good opportunity for the industry to step back and say, okay, which of these tools works best within my framework and can be integrated, and as contrasted with what we would build internally. So at the same time, we're also looking at operating models and our location strategy to ensure that we've got both the right balance of expertise, but also the right level of supervision of our offshore teams and teams in some of our smaller trading locations to really primarily to facilitate them using the same set of standards and the same framework, which we found probably more difficult than I would have expected, given that in some of the individual regulations are quite specific. They can be very tailored to their own location. I see your sign, Lee. Thank you.
No problem.
So really key for our front office sponsors is the question of whether we're getting good value for the investment we're making in all these efforts, because at the end of the day, you know, we're not going to play, we're going to work. And I always tell them compliance itself is its own reward, but they are increasingly asking for us to be able to demonstrate that we're investing in the right areas of the program to produce the most value in the form of risk mitigation. So that has also become part of our assurance process to be able to demonstrate progress both in reducing our remediation backlog and I of course always, you know, having fewer incidents and fewer inquiries. So in terms of the pace of change, which Lee asked me to cover, we get a lot of requests for us to be able to kind of absorb unplanned change, whether that comes in the form of a business mandate changing or changes to the regulation that we weren't anticipating. That to me is the biggest operational challenge that we face, because the rules are quite complex, and it can be difficult to just absorb a whole new rule set into our process. So that's the one challenge we've set ourselves this year, is to kind of set aside some capacity to be able to do that in a way to just address everything happening in the market. So in terms of assessing effectiveness, I'll cover this super quick and then hand over to Sonia. Our approach to the second, third line has become much more collaborative because of the complexity of the rules. It's really not realistic to parachute an operational risk team or an audit team or a compliance assurance team into a function within operations and expect them to understand the ins and outs just of the mechanics of how things work, but also of the really complex rules. So we're conscious that they have to maintain independence and not be seen as embedded in our space, but we found that regular dialogue has really been helpful in the quality of the output of their reviews and really providing good information for us to absorb into our process. So we've observed that rather than a complete reliance on formal annual planning of reviews, those teams are also working to be a bit more nimble and responsive to issues as they come up, which we found to be really positive. So I know Sonia's going to talk more about the alignment of assurance between the first and second line and some tools to use to do that. So I might just close there and hand over.
No, that was fantastic. Thank you, Suzanne. What I wanted to touch base in with is a couple of questions that have come in. I think you may have touched on the first one already, but it was really about how companies are managing the pace of change. And you may have just touched on that actually, but is there anything you can add a bit more around that in your experience over the last year or two on that?
Yeah, I think planning has become much more aggressive in that we, beyond just planning a budget, we've also had to plan literally month by month, you know, and I'm not a Gantt chart expert by any stretch, but we've become very specific, whereas you used to plan things quarter by quarter. We're now having to be very specific in terms of when rules will be clarified, when the requirements will be obvious, and when we can start to build. And also that pace of change is helping us manage testing. So if we can anticipate it, we can be sort of dev complete sooner and give ourselves more time to test, and then hopefully have fewer issues once we go live. But it's definitely a challenge. We had hoped that things would quiet down post Brexit, but it's been quite the opposite.
No, I can imagine. And also with, again, I think you touched on this question as well, that's coming from Dev from 2MC, was really around about the operating model. If you've installed an operating model to, you know, to remediate some of the regulations coming in, obviously with the pace of change that's going on, that could be obsolete within a month. And, you know, how are companies managing that at the minute, or how are you looking to do that going forward? Again, I think you did touch on it a little bit. But
a little bit, yeah. So for us, it's been about figuring out how to balance our location strategy in terms of having some quite senior people with, you know, years and years of experience in the space in the trading hubs, and then really making more active use of the teams that we have in our service centers, who are excellent and sort of super keen to be not just in a processing role, but in a role where they have sort of buy-in to the process and are helping to drive the operating model. So we found that really productive this year. The key for us really has been, I think, given the cost environment and obviously the impact of COVID, we've had real resource challenges. So we've had to really try to plan every additional capacity into every pod so that they can absorb change as it comes through, and we're not kind of scheduled to the nth degree, and then forced into kind of panic stations if something comes in that can't readily be addressed. So I wouldn't say we've got it perfect, but I think we're doing better than we were a year ago. So that feels good.
That was great. Thank you very much. But I'd like to thank Suzanne for her talk. It was very insightful. She's got bandwidth issues, so she is a real person. She's not an AI.
I promise. Yeah.
Excuse me. So she didn't have the ability to put the camera on. So thank you very much, Suzanne. A big thank you to our co-sponsors for tonight's event. That's ASIN and Capco. Also, a big thank you to the Women in Risk and Control, who this is in association with, and the RegTech Forum, for helping us with speakers and for content for this session as well.